What's going on, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers up here on the left. As always, we have our broad market, our core list of companies, as well as the quickfire round, which the Discord members did vote on a new set of tickers. If you want to vote for next week, feel free to join the Discord. It's linked down below in the description with our other resources, such as the Swing Trade newsletter, as well as our Instagram account where a scan goes up every single morning. So check that stuff out. It is Easter Sunday, so happy Easter if you celebrate Easter. If not, happy Sunday anyways. Does not have to be a holiday to be a good day. We have monthly bars to check out in this week's episode, right? We finished up the month of March, so let's just jump right in. Jumping right into the SPY monthly chart, the first thing I want to point out to you guys is the monthly bar structure, of course, which is a hammer, right? So this hammer here is following up two inverted hammers. And what I want you to take away from this, the point I'm showing you this is you're not trying to time a market top based on monthly, inverted hammers, regular hammers, so on and so forth. Sure, they can give you some sort of idea of who's starting to take control, but the market never needs to do anything that you think it needs to do, okay? So just because we had inverted hammers does not mean we're trying to time the top. Just because we're moving higher into all-time highs does not mean we're trying to short the top because we think the market's too high, right? Actually, based on everything we're looking at here, it looks like the market could go higher, right? So reasons for that, one is that the market's still one time framing higher, meaning that the lows here are getting higher as well as the highs. Higher lows, higher highs, clear uptrend. So this could continue for who knows how long. As a matter of fact, headed into April, we're already moving into new all-time highs and we have a green monthly bar developing. Sure, it's only 1 or 2 days, but at the end of the day, this bodes well for, the one time framing to continue. The next thing I want to point out here on the monthly time frame is the volume, right? If we look down below at the month of March, obviously volume was elevated, meaning there were more people transacting at these levels, giving me more confidence that, there's a lot of people interested in doing business here as opposed to back here. Right? So simply put, volume is giving me more confidence that the market wants to hang out up here and not totally roll over. All right. So that is sort of the monthly perspective. Again, based on the monthly, you're never trying to time a top or a bottom. Let's go ahead and go down to the weekly, see what type of structure we can, make out here. One thing I would want to point out is, of course, what we talked about in last week's video, which was that 395, we got the close above, and boom, we pretty much went right to that 400 figure. So everything about the S&Ps, at least, is poised in a slightly bullish manner, right? We're breaking out of this sort of area of consolidation here. On the monthly bar, it looks good. We have that lower sort of buying wick on the bottom of the monthly bar. The weekly bar is solid green. We closed at the highs, and there is good volume being conducted at these levels. Now, on the daily time frame, let's actually talk about some tradable levels for this upcoming week. The market's made my job extremely easy, right? If we continue higher, let's cover that case first. We're just looking at blue sky levels, whole and half dollars, intraday levels that do form. You're just sort of trailing your stop higher if the market continues to grind up higher. Now, what's most interesting to the downside is there's a few scenarios that we can, look at as most bullish, next most bullish, and so on and so forth. The most bullish is obviously a pullback to here, 398, prior all-time high, and then a leg higher. That's the most bullish case, right? Just using prior resistance as support. If that breaks, though, what I would be focusing on is this level, the 393 quarter. Why is that? Well, it wasn't only Monday and Tuesday's low, it's also the low of the spike that was put in on Friday. If you're not familiar with that, go check out the midweek market update video. We talk all about it. We've held it, and now we've moved higher off of it. So that is a bullish thing, and the 393 quarter area is the area of support that I would want to see hold on any sort of deeper pullbacks for something like that. Okay, so that's sort of the key pullback areas that I'm watching. Anything underneath, of course, is going to have to be the 50 SMA. Because we've tested it so many times over the course of recent history here, I would be skeptical around it, right? It might take some time to resolve if we come all the way back down and give ourselves a 50 SMA retest. For now, again, you have the two scenarios that I would be watching out for, blue sky levels above. While we're on the S&Ps, let me also talk about the Friday jobs number, okay? And I don't often talk about fundamentals, but look at this range here that was put in based on the extremely positive jobs number on Friday, the non-farm payroll. It was an even larger range than what we saw into the end of the day on Thursday. So all things considered, I think there's a number of bullish things out there in the marketplace that could cause us to go higher. So that's the look on the S&Ps. Let's move over to the Qs. So the QQQ and tech is notably different, and we've talked about this for some time. No surprises here on the monthly chart. Again, two inverted hammers here should have, not should have, but it led us to believe that sellers were maybe taking control, especially with that leg down early on in the month. I'm sure it had a lot of people skeptical, but now looking at it from a 30,000 foot view here, if you will, on the monthly time frame, of course we have a doji hammer, right? And most notably, we held on to market structure from the monthly time frame. So all things considered, it's really not that bearish here in the QQQ, and we've even opened up April in the positive direction. So it's not like we're one time framing higher like the S&Ps, but based on the candlestick structure, based on holding that critical area of prior resistance as newfound support, everything sort of looks good here on the monthly time frame for higher to sideways action. Of course, we're biased to the upside because look at the trend that we're overall in the monthly time frame. Again, you don't want to fight the overall trend that markets are in, and nothing about this, again, just like the S&Ps, is telling us that we're trying to time a top here and short the absolute heck out of the tech sector. So all things considered on the Qs, looks like it could go sideways to higher. Again, it was very easy in quarantine to get used to sort of tech being on a blistering hot run. I think it's sort of a snap back to reality here, making markets a little bit more difficult to trade. But again, this is the reality and the nature of the beast. I wouldn't be surprised to see us do some action inside of here and then potentially see a break for trend continuation. But again, monthly time frame looks good, volume looks good, same sort of explanation there as what we talked about on the S&Ps. Let's go ahead and drop it down to the weekly here, and we'll talk about this briefly because I think the daily does a better job of illustrating it, but we pretty much closed right at our inverted head and shoulders neckline there. There is some room to run up to the all-time high, so 340 is sort of on deck if the S&Ps can continue to chug higher. Again, remembering that market structure from the monthly time frame, there's that sort of support area. It's around 300. It's slightly below that technically, but you can see these lower wicks definitely held it, and we're again back at this sort of breakout point from the technical pattern that we're in on the daily. So let's go ahead and check that out with some levels and talk about areas of interest for this upcoming week. Obviously, we had a gap and hold on Thursday, which is the most bullish sort of gap up that you can experience. The next most bullish would, of course, be a gap up, a gap fill, and then a reversal back to close green. But this is the most bullish case where we got the gap and hold, especially right at that neckline. So because we've closed above, I would expect, a dribble higher earlier on in the week, even though we have poor structure below. The target here is obviously the next gap fill above from about 327.85 up to about 330. Anything after that is going to be this area of resistance at 335, the whole dollar, before we technically get to the all-time high. Those would be upside targets if the market's, blistering red hot. To the downside, obviously your gap fill underneath is the first area that you would want to see support, especially considering the 50 SMA is there. So if the S&Ps pull back, and consolidate a little bit, tech pulls back and consolidates a little bit, the first area of support you want to see hold is the 320.71 gap fill and 50 SMA. Anything underneath that, I would probably look for this gap fill here as opposed to the 317.23 area. You'll notice that we also got rid of the resistance trend line on the daily time frame because it was clearly broken through price as opposed to sideways through time, so that is no longer there. And last but not least, we have IWM Russell 2000 and our small caps. And my goodness, look at this rally right here. Just absolutely, when you look at it from this perspective, it's like, my goodness, that's just so impressive that the market was able to do that, right? And now we're starting to see some cooling off, right? So I wouldn't be surprised, again, just like the Qs, to see some love come out of IWM per se and move into something like the S&Ps. IWM has been doing a phenomenal job of keeping the market as a whole moving higher. And now with this pretty large indecision candle here, I wouldn't be surprised to see it go sideways in this range. Again, we talked about that on the midweek market update. We're smack in the middle of the range, and you can tell we're pretty much there by where this April candle is. But again, just like the Qs, I would love to see some sideways consolidation and potentially trend continuation after that. Nothing about this chart is overly bearish yet. I would say that the only time you would start to get bearish on any of these is if we start to take out the structural lows on the monthly chart. And based on where we're trading right now, there's still a whole lot of room to go. It would sort of coincide with a break under 200 just based on eyeballing this here before we're going to get extremely bearish on IWM. So again, not trying to time market tops based on these monthly charts. Everything still looks good here. Even if we consolidate up here at the highs, again, what is that telling you about the market? It's that people want to do business here and not down here. And that's obviously a bullish thing. So consolidation at highs is always healthy for a nice uptrend. Keep that in mind. We'll drop it down to a weekly, see what we can tell from the structure. Again, not a whole lot of difference here. We're just trading in this overall range, something that looks like this. If we can break out one way or another, just look for your doubling rules. Again, we're not favoring the downside because of the trend that we've been in. However, if we do go lower, your target would be sort of around 180. To the upside, we're going to have to give ourselves a little bit more room here to play with. The upside target on any sort of break, just by eyeballing it here into all-time highs, would be over 250, probably 255, again, based on a quick eyeball test here on the weekly time frame. So lower wicks are in place, a little bit of a double bottom. Technically, this is a higher low there. Let's actually check that out on the daily time frame. And talk about some tradable levels into this upcoming week. Again, there's your slightly higher low here, but we are overall trading in this range that we've talked about. Now, one thing I did point out in the midweek update is that we're only looking for longs above here and shorts below here. Obviously, with the close there on Thursday, we're now above that sort of 222 pivot. Very important level from in here. Go look at the intraday data if you don't believe me. But I would suspect that if the SPY continues higher and the whole rest of the market continues higher, we're looking at 227 in IWM and potentially this pivot high here at 230. Anything underneath, I'd watch out for that 50 SMA. Baby little gap fill right there. I wouldn't place too much import into it. If the whole market rolls over, maybe it's a target to the downside, but anything after that, it's really going to be 215.03 now, especially considering that we've defended higher lows here around the 207, 208 handle. That would be my thoughts on IWM. Probably the one I would not want to trade out of all three broad market indexes. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. So jumping right into Apple, this one actually looks fairly weak considering what the Qs did this week. We're sort of stuck in this range. I would really not be long biased until we can take out the 124 area here, in which case target above is 126.65, and I wouldn't really look for too much after that. Based on the 50 SMA downsloping, it will provide a super resistance. If it does break though, and the Qs go to all-time highs, for example, you're looking at 131.17 here in Apple. To the downside, if we remain in the range, we're obviously looking at the gap fill here, but most importantly, the 200 SMA, the support trend line, and horizontal support all coinciding right around that 119 area on Apple. One thing I want to point out here is that earnings on many of our tech companies are coming up. For any of you longer term position players, keep that in mind. It will affect options pricing. Jumping over to Netflix, this one actually looks better, in my opinion, than Apple. Even though we've struggled to resolve this area here, 518.56, look at the break of this resistance trend line authoritatively with price as opposed to sideways, right, through time. We always talk about that concept here, and it looks like a strong break. So for me, sort of tilting bullish here on Netflix now that we have a technical break. We also reclaimed that 50 SMA, so if we can continue higher, the target will first be here at 553.13, and then anything above that is going to be here, 566, the whole dollar, which is a pressure cooker top from these three highs in here. Intraday, that's a very critical area of resistance there. If it breaks, obviously trade it up towards all-time highs, but am I foreseeing that in the course of 1 week? Probably not. Remember, earnings are coming up on this one sort of mid-April, something to pay attention to. If this is a fake break, right, the way you would know that is if we consolidate sideways for a number of days and sort of get a candle that pokes its head above and then comes back down into this consolidation. That would be the sort of signal to me, at least, if we're trying to resolve that 50 SMA, that there is the potential for a rollover back to this 518 area that's been so difficult to resolve. So that's what I would look for in the fake break scenario. Under 518, I would watch out for the 200 SMA in between ranges here, ultimately before support at 500, the round figure, and then 493.85. So Tesla, more like Apple than the Qs and Netflix, for example, we actually didn't even make it all the way up to our sort of neckline here. And as a matter of fact, when the Qs, right, tech sector was gapping up and holding that gap at the neckline, what did Tesla do all day? It pretty much sold off, right? So this one is not really something that, I would be overly bullish in quite yet. As a matter of fact, I would probably wait for some consolidation just below our neckline, right around that 720 area, before anticipating a break and a a move higher in Tesla up to about 780 or 800, the round figure. Until that happens, again, sort of expecting some sideways action out of Tesla. If it continues to roll over, critical support is obviously here, 601.50 down to about 600, the whole dollar. Anything after that is the head of essentially the failed, at this point, inverted head and shoulders here at the 543.70 mark. 200 SMA will catch up as it, continues to upslope there. But again, Tesla isn't really, it's not showing its hand too clearly here. I wouldn't want to get caught up in any sort of, pullbacks if you're expecting longs, or if you're expecting, lower prices, a move to the neckline, right? You don't want to get caught up in that, especially in Tesla. So wait for some of those key levels. Alibaba continues to be the sloppiest chart known to mankind. This one also showing some weakness, just like Tesla compared to the Qs, which were gapping and holding. Baba obviously saw a red sell-off day there, and we actually closed below critical support there at 225 just about. So anticipating a move to this most recent low around 220. Anything underneath is this low in here around 212. To the upside, if we can make a move higher for some reason this week, the critical area of resistance that we need to clear first is really there. So let's go ahead and get rid of this one. It's really these three highs in here around 231.50. If we can clear it, definitely some room to run up to about 241, so about a $10 move to the upside. Again, that's if there's some massive reversal, something like that. But based on this candle structure, based on the weekly sort of structure and where we've closed, it doesn't look like a likely scenario. Alibaba's been a difficult one to trade. You guys know I tell you to sort of stick to day trades only on this one, so take this for what you will. So Facebook is a chart in tech that actually looks phenomenal. Obviously, we got the break a long time ago of the resistance trend line. We pulled back perfectly to it, retested, went higher, and now we're sort of, waiting for that all-time high retest. Now, based on the candle here, the inverted hammer, I would be skeptical out of the gates early on in the week that we go much, much higher in Facebook. I would sort of watch for sideways consolidation, maybe for it to cool off. That would be the preferred setup, right? Letting it take a little bit of a break, forming some sort of flag here, and then taking the break of that pattern. But we don't want to fight it if it does decide to go higher. So your all-time high is here, right around 305. So anything above that, blue sky territories. If we pull back based on this inverted hammer, we would want to set a new higher low. So not moving all the way to here, but rather here this time, right around our 287.90. That would be the most bullish pullback in Facebook if it held there and then made a new leg up after that. Keep in mind, again, earnings on this one are around the corner. So believe it or not, NVIDIA also is starting to look pretty good just based on the fact that it didn't really spend as much time as we thought inside of this choppy consolidation area. We also have a very important, higher low here. And again, moving out of this consolidation, resolving that 50 SMA nearly immediately, I think it looks good for higher. Now, we do need to see, in my estimation, some consolidation here and then a break of this 560 area as noted by prior resistance. And then it sort of acted as a little resistance there as well. So ideally, again, remembering how far we've come right here, it would be great to see a bull flag look something like this. Any pullbacks here to hold the daily 50 SMA, something like this, and boom, your next targets above are going to be 573.50 or 590, and then the true all-time high area up in here. Let's put a value to that just in case, again, I'm not anticipating we go there this week, but over the course of time, you would want to keep your eyes on 611, just about the whole dollar, and of course 615, the true all-time high up there. Microsoft, this is another one that I have thought, I've said this one looks fantastic for a number of reasons. Most notably, it didn't really experience the extremely bearish pullback as many of the other names did, and it's just now starting to move out of a long period of consolidation here, especially with these higher lows continuing to form. I mean, what's not to be bullish about Microsoft right now? I would anticipate a move to the all-time high here and potentially higher, right? All this energy that's been built up in this consolidation range sort of needs to be released, right? The sellers are either going to need to stop out of their positions. People are going to recognize that, hey, Microsoft is moving out of a range. They'll become new buyers. They just secured some massive contract, right? So all of these things, in my estimation, are bullish for Microsoft, and I do see it moving higher towards that all-time high. Anything above blue sky levels, right? On any pullbacks, you want to see it hold this sort of top of the range here, right around that 237.35. Ideally, it would hold on to these wicks in here at 240, but we'll give it some wiggle room. And then next up after that, of course, is the daily support trend line. If it fails back into the range, I would expect to move lower to retest the bottom, right? We always talk about the fact that we have sort of balanced rules. If we see a look above and fail, the target is always here, the bottom end of the range. Again, that's that 228.78 level. And last but not least, the beast, we have Amazon. This one is sort of in the middle, right? We've sort of talked about what's good in tech, what's bad in tech, and this one's sort of falling right in the middle. Of course, it is making a move off of these lows from the consolidation here, but again, it's not like it really took out the neckline of the inverted head and shoulders that was somewhere in here. It's also not clearing that 50 SMA yet. Sure, it did take out the 200, but it's done that in the past, right? So I'd say the 50 is a little bit more important right now. It looks good though, sort of good, right? We have a bullish close here on Thursday. We're at sort of that 50 SMA. I think if it can go higher, we're looking at 3,200, 3,250. Anything after that is our next level up above from in this range here at 3,350. That's quite a ways up for Amazon. I'm not saying any of these levels get tagged this upcoming week of trade, but they're areas of interest that you want to keep in mind as we continue to trade forward. On any rollovers of the 50 SMA, ideally we hold here, right, this 31, 32 area, and then make a leg up, something like that. If it goes lower, obviously it's a look above and fail, just like we just talked about in Microsoft. Your target will be the bottom end of the range, which ultimately I would want to adjust this support a little bit lower, right? This 32.50 isn't really cutting it. I would say it's really somewhere in here, 30.28, 30.25, somewhere in that area. You can see there's much more meaningful lower wicks down around this area. So that's the downside target. Anything underneath 29.50 and then 2,900, the round figure. But again, based on the chart, I don't really think it goes there. I think this one, again, sort of falls into the neutral category of tech to be, bullish on, especially given that the Qs are sort of taking out that neckline. Amazon's kind of there. This one's sort of a wait and see. If we can take it out, sure, act bullish with the rest of the market, but this would be one of the last ones I would look at. I would look at the Facebooks, I would look at the Microsofts, and I would also look at, here's one for you. We'll just throw this extra one in here, GOOGL, if I could spell there, GOOGL for Google, Alphabet company here. This one is very similar to Microsoft, right? We have an area of consolidation, a lot of eyes on this area. We're right back up at the highs, starting to poke up above. We got the strong close above, looking for higher in Google essentially also this upcoming week of trade. Kicking off the quickfire round with Mara. This one is obviously going to closely follow whatever Bitcoin does, so always be watching that if you're deciding to trade it through Mara. Obviously sitting here at all-time highs. If we move higher, you're looking at something like 55 and 60 the whole dollar after that. Any sort of pullbacks, ideally it holds on to prior market structure around 44.20. Anything underneath though, and I'd say all eyes are going to be on this triple super support, right? 50 SMA, support trend line, and horizontal level. Depending on time of week, when we get there, if we get there, it's anywhere between 37.75 up to about 40, right? If the pullback looks something like this, that would potentially be a buy, in my opinion. Look at how long the trend line's been intact. Obviously, people are bullish on Bitcoin. We set a new high. Everything about that would be a good potential setup there. Next up, we have PLTR. You guys love this one, and still, I don't see anything to do on it, right? We've been chopping around this 23 figure. We haven't seen any follow through to the downside. We haven't seen any follow through to the upside. All the levels remain the same, right? 23 is sort of your pivot for now. If we, fall back below it, I would be skeptical this time of any shorts until we take out 21, in which case your target's now been cut, almost in half, right? You're looking at 19 as the target below. And longs, again, skeptical here because we've traded back into the range. Now we're right back at the bottom here at 23. There's just nothing really attractive about PLTR. So, everything remains the same about it. If you want to be long, your target's up here to 27.10, 50 SMA after that, but I don't really see the setup here. Next up, we have NEO. And NEO is an interesting one because all things are going to hinge upon whether or not this gap fill will reverse, right? It gapped up, huge news there, into Thursday with the president's spending plan, $2 trillion, whatever, but it filled the gap. Now the question is, do we see a gap fill reversal or do we trade back down into this range? In which case, I'd consider this a flush point based on the 200 SMA being here, three lows nearly identical. I would say if it takes that out, there's some room to move lower here in NEO. And just to get you a target underneath, we're looking at about 25.85 to the upside. If we get the gap fill reversal, take out this high and your target is here at 45.79. Next up, we have AMD, and AMD is pretty interesting because we actually have a gap, a gap and go essentially, partial gap fill there. But most importantly, we've held on to this higher set of lows. So I think it looks good to make the move up to about 84.61. 50 SMA will be there. Expect a little bit of pullback if we get there. Overall, recently, kind of in a downtrend, right? You could draw on a bearish channel like that. So that would almost be the top of the channel as well. Look for a little bit of pullback again if we get up into those areas. To the downside, if we do pull back, you would want to see these higher lows hold essentially. And just to give you an idea of where those are at 75 the whole dollar. Next up, we have Intel, and Intel, I would just warn you here, look at the past earnings cycles. Look at how almost not guaranteed, there's no guarantee in the market, but look at how many gaps have been formed, big important gaps based on earnings cycles. So coming into an earnings cycle, be prepared for that. If we can take out this sort of high in here around 65, trade it up towards that 66.39 and then 67, anything underneath, wouldn't really want to get short underneath the flush point here at 63, but if it starts to take out the support trend line and 50 SMA, a little bit of room to run down to 58 the whole dollar, right? So next up we have ARK, and this is Kathy Wood's fund, of course. This one, there's a number of ways to look at it. For now, it's just off the highs. Although tech and Qs are up at their neckline, ARK isn't quite there, right? The one thing you could look at this is a double bottom, but the reason, the only time you would get bullish on this double bottom is if it takes out the quote-unquote neckline here around 129.20, in which case your targets above are 138. After that, you're looking at 150 just about. As of now, again, just like NEO, it had the gap up and then, it essentially sold off the entire gap. If we get the gap fill reversal, those are your levels above. If we see the gap fill and then move lower, again, targets down here at that double bottom, closer to 1960. Next up, we have ZM, and ZM, kind of tough chart. It's not really cleanly in any sort of up or down trend. Obviously, the most recent trend is down here, but overall, overwhelmingly, this thing has been on a tear. Now that quarantine and sort of remote work is, I don't want to say coming to an end, but not as hot of a thing, I'd say ZM is sort of feeling some of that impact. Friday's candle, absolutely nasty. Nice run up and then gave it all back in a short period of time. If we come back and retest this 307.50 mark, I would expect lower in ZM back to the bottom end of the support trend line, which is downsloping, of course, and maybe that 275 mark, anything underneath 237 to the upside. Keep in mind this range, right? It's just a range that looks like this. If we can take out the high, obviously your resistance is up at 356. You have major moving averages above and a downtrend resistance line. It's just not a chart that I see a ton of clarity in. There's not a clear setup here, so not something I would favor into trading this week as any sort of swing. Next up, we have Cisco. Cisco actually is phenomenal because we have a daily bull flag forming, right? We've been flagging. There's a flag. Here's a miniature flag, and here's potentially another flag on top of that. So all things look really good here in Cisco. The trend is clearly up. If we can sort of hold on to, I would say this is the area here, 51.32 as support. We have multiple hammers forming off of it. If we can hold on to that and take out the high, I don't see why we wouldn't continue flagging here. Anything underneath, again, I wouldn't really look to be shorting this just based on the bullish nature of this most recent trend higher. Huge injection of volume here. Don't want to really look into that fundamentally why that was. But, based on our levels, looks good if we can take out some of these highs and continue the flagging pattern. Next up, we have Lululemon, Lululemon, not melon, lemon. This one is sort of trying to resolve its resistance trend line, right? And what I would say about this is it's just stuck in a range here, and we've had a number of fake breaks, so we're not going to place too much import into that. We have the 50 SMA barreling down. We have the resistance trend line barreling down. I would say just use it as, strict doubling rules. If we can take out the top of the range, really get over those 4 upper wicks there, target the 200 SMA. Look at how perfect that doubling is. To the downside, if we break down out of the range, your first target's here at 290, but ultimately it could go lower than that just based on the energy and the range that we've been consolidating in. I would keep an eye on this level here, right around 270, based on the red candle that printed on Friday, sort of slightly biased to a breakdown at this point. How aggressively you want to trade that breakdown, that's sort of up to you. Went through earnings cycle here. Volume is slightly elevated. Look for some follow through in one direction or another if it takes out that range. And last but not least, we have Gilead Sciences here. And not a whole lot to say. It's not the prettiest chart overall. Again, if we just think about where we are in terms of overall ranges, up towards the upper third, right? If we just break this into thirds, we're definitely trading right at that upper third of the overall range. If we can clear 65 or 66.50 rather, look for a quick snappy trade up to about 68, the whole dollar, 68 quarter, and some of these recent highs. Anything above that, let's go ahead and see what we got. We're looking at about 75 or 72, quarter there, but that's quite a stretch here on Gilead. I wouldn't expect that over the course of a week. Critical move moving averages are supporting below, so I'd watch out for those to hold on any sort of pullbacks off of the top of sort of this area of resistance here. Watch for that to hold. If it fails, though, your next major area of support is all the way down at 61.52. Not quite the cleanest trade here in Gilead. That's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, feel free to let me know down below in the comments section or by simply leaving the video a thumbs up. All of that being said, I wish you a green trading week, and I hope to see you in the midweek market update on Wednesday.